This is CNN Breaking News.
Welcome to The Lead. I'm Jake Tapper. You hear the bell there. We're beginning with breaking news in the money lead. The Dow closing down more than 500 points today. A second day in a row of triple-digit losses, wiping out most of the gains the Dow has made this year. CNN's Allison Kozik is live at the New York Stock Exchange for us. Allison, what's behind these massive losses?
First of all, look at that number. The Dow down 541 points. You know what, Jake? In the last hour of trading, the swings were so wild. We saw the Dow fall 400 points and 500 points and 700 points. Even hardy stock traders I saw on the floor, they couldn't believe the volatile swings that the Dow made. Now, there's no one reason for the two-day sell-off, but higher interest rates, they're the real trigger here. Pressure has been building for a while. So as the economy has grown stronger and stronger, the Federal Reserve has begun raising short-term interest rates to try to keep the economy from overheating and to try to keep inflation in check. So for stocks, there's concern those rising rates will eat into profits, they'll make borrowing more expensive, and potentially slow down the economy. A glaring example for you already happening, mortgage rates. They're at levels we haven't seen in 7 years. Now, President Trump blames the Fed for the sell-off, saying the Fed's gone loco. Some traders say, look, those tax cuts that President Trump pushed through, they actually juiced corporate earnings and drove up stock prices. It was like pouring gasoline on the economy. Well, guess what? Now it's time for the Fed to cool down this red-hot economy by raising interest rates. Jake?
All right, Allison, stick around. I want to bring in Rana Foroohar right now. She's a global business columnist and associate editor for the Financial Times. So, as you heard Allison there, President Trump blames the Federal Reserve for this, essentially saying it's their fault for raising interest rates. Is he right?
Well, you know, when interest rates go up, it makes debt more expensive. There's actually more debt out there now, about $60 trillion more than there was before the financial crisis. So sure, markets don't like that. But there's something else in play here, and that's that we are in a U.S.-China trade war. And that is really a tech war. And if you look at which stocks are down the most, it's been the big tech stocks. Investors are worried that the tariffs that the U.S. has slapped on China are going to ricochet back and really hurt those stocks. The Chinese have their own big tech giants. There's a feeling in the markets and amongst economists that this tech trade war is going to last a long time, and we're going to see those stocks really hurt. Interesting.
Allison, for people sitting at home who are worried about their investments, worried about their 401ks, what's the main thing they need to know?
The main thing they can think about, if they are just those retail investors, not those professional investors, I'd say the best advice is to sit on the sidelines. There's a lot of volatility here. Even the traders who use their computers to trade, they can't keep up with the volatility that's here. So if you're invested in the market, the real good advice here is just to sit on the sidelines, wait for this to pass. And all indications are the wild volatility that we saw today, it's not expected to last. Jake?
And Rana, the U.S. and China, they've been going back and forth like this for weeks, if not months. Today, President Trump's top economic advisor said that they're making progress in setting up a meeting between President Trump and President Xi of China. Is that helping to erase any of these market worries?
Well, it's interesting. I think you may see a head fake between now and the midterms in November, where, you know, President Trump comes in, maybe cuts some kind of deal with the Chinese. Maybe they appreciate their currency a little bit. Maybe we see some easings of tensions. But I don't think this is going away. I think that we're going to be back here several times in the next few weeks and months talking about these things because this is an existential war. The things that the U.S. administration is asking China to do, fundamentally, they don't want to do. It's not a short-term fix. And
Allison, what are we expecting from the markets tomorrow? More bad news?
More uncertainty. Look, tomorrow begins third quarter earnings season. The good news is that the expectations are high that companies will report positive earnings. So many traders that I've talked to say, look, if we get those positive earnings, it may settle down the market. But there's still a lot of uncertainty, and a lot what Rana was talking about, the uncertainty with those tariffs. That could wind up hitting companies really hard. And one thing that investors are going to be watching for, as companies give out their report cards for the third quarter, they're going to be trying to see if those tariffs have been cutting into profits, if those rising costs are hurting companies. And if you see that, you could see the market take another hit.